have Arvind Chari, the Chief Investment Strategist at Q India UK, joining us to help us decode this entire tariff situation that we're seeing. And Arvind, hi, thanks for your time today. Good afternoon to you. First up, give us your take on this 50% tariff with this now 25% additional tariff now being imposed on India. To some extent, I believe some part of the market was believing that, a taco trade may play out here, but now we do have the certainty that this is actually for real and finally happening. What are your thoughts on that?
Well, always good to you, Aisha. Good to see you again after a long time. Uh, so I think it's almost surprising where we have reached as a situation. Back in July, I think the Indian trade negotiating team was very confident that India will walk away with a 15% tariff, which would have put India in a very good stead as compared to other countries with tariffs which are higher than that. So from there to a situation where we are seeing a 50% tariff on almost all exports. Of course, there are some exclusions, electronics, pharmaceuticals. I think I saw a bit of auto and auto components and also iron and steel. So there is some exclusions, but we are in a tough situation. So of course, a lot of people will say that the impact on GDP is less currently, and that is true because the overall exports to the US, if you exclude these sectors, is not very large, and its impact on GDP share will be limited. But I've written about it before that this is not the way to look at it, because if India would have walked away with a 15% tariff rate, look at the opportunities that it would have created for India in terms of being able to access in a relatively cheaper way a large share of the global market. And that is important because if you look at the last 10 years, the nominal goods exports in dollar terms is about 4%. So we've really not done much in the export side. We know we have missed out on the global value chain, but even in existing traditional sectors where India had some amount of benefit or market access in the goods segment, we seem to have lost that in the last 5, 7, 8 years. So it was important that we do a good bilateral trade deal with the US and with other large developed nations so that our export share of goods increases and our manufacturing exports increases. So that has not happened. Maybe we'll see a better deal with the EU coming soon, given that we have had an impact. And we are seeing some overtures that India is making towards China, and that is also always welcome. But the impact would be larger than what we anticipate. Take anything about input output ratios of all industries. It tends to be about 70%, right? So it's not only the export sector with the export of goods which are getting imported. Inputs to those exports will also get impacted. So from a near-term basis, there is some impact. But when you look at the opportunity in terms of what we could have managed and delivered, I think it's a big setback.
Sure. But Arvind, there are two ways of looking at it. A, of course, one is hoping that a taco trade will play out here as well. But is it more that the market is willing to wait it out for a month, 2 months? Is it more a time-wise wait-and-watch approach? Or is it more in the hope of that 50% becomes 25, nil, or 10%? Or, it's the quantum that'll make markets happy. Tactically, what do you think really are the assumptions right now?
It's very difficult to make the assumptions given how volatile Trump's behavior has been. But that also gives you the opportunity with Trump. Either it is a taco trade or it is the fact that you can actually enter into a negotiation with him, and there must be some give and take, right? So it all depends on whether the relationship that has unfolded in the last 2 months, is it because of ego or is it because of actually the India-Russia trade? And in that, India actually had a positive. India is a net importer of oil. And we could have seen a situation where you're entering into a trade negotiation. You have the Achilles heel of being very large importers of oil, and 50% of the imports of oil from Russia is by the private sector. It's not by the domestic oil companies. It's not entirely benefiting the country in terms of imports and refining. Although the private sector does add to windfall taxes, and they also add to GDP in terms of producing those products and exporting. But you could have seen a situation where we could have weaned away from Russia and moved some of our imports from US. So there are all these give and takes. We still have some of those cards. Of course, we are not China. We cannot ban rare earths. We don't have a material like that which we can ban and which will hurt US. Or we don't have a large size from the corporate sector or from the government that we can offer to the US for a trade negotiation. So we'll have to see how that trade negotiation goes, but it is possible. If you look at the history of India and US relations since the 90s, it's been a relationship where it has, at least in the State Department, the overture towards India has been a lot more positive. In fact, the Biden-Modi summit last year, and the readout out of that was like a 58 paragraph, very comprehensive net economic cooperation between the India and the US. So there is hope. But till the time that happens, and India is at 50% relative to everybody else at 15, 20, 25%, it is going to be a setback. The way the markets are reacting, as it's basically for the current situation that the immediate impact on the economy is not that high. The listed market impact of that total goods exports also limited, given the sectors that are in the indices and reflected in the markets. So that's why you don't see much activity there. You're seeing some sell-off in the currency. So the rupee has been depreciating and it is underperforming against emerging markets. And we've also seen that in the bond yields. So the biggest impact has been on the bond yields. Of course, it is not only a factor of the impact from trade deficit or impact from the currency. It has some monetary policy implications as well. But broadly, I think the impact is still muted because what you said, there is expectation that we might swing out of trade and get into the better side of the US relations. And the impact as of now is limited from a macro perspective.
Right. Okay. So that's the word coming in. Arvind, while I agree when you say, we don't have the kind of leverage that China does in terms of rare earth. Earlier, the picture was very rosy with China and US. And just this morning, Trump has threatened to impose a 200% tariff if those rare earth magnets are not exported to US. While we don't have that, what we have going for us is generics pharma, something that the US needs from us. And while we don't have any specification on the pharma number right now, do you think that could act as a turning point in India-US negotiations? Because generics is something that the US really needs from India.
It is, and it is one of those sectors where India has, like auto components and generic pharma is something that India has exported up in the goods side. But I mean, can that be a threat that we will stop supplying the medicines that you need if you have a retaliation? Like India has, as of now, apart from any direct communication between the two leaders, India has not retaliated yet. So we're still waiting for a rapprochement because that is a better way to play the US relationships, right? Like that is a large market. We will be able to gain and increase our production and market share over a period of time. And do not forget that they're also pretty large investors. I'm not saying there is an impact on sentiment, but there is always a decision to be made, right? So India gets reasonably good FDI investments from US and US corporations and playing the entire value chain. India also gets significant amount of portfolio flows, right? So if you look at the Fed data, about $350 billion of US resident money is invested in India. And that is a very small share, as I've written very regularly, that the global world is invested less than 1% of their assets is invested in India. So India, there is a lot of scope. So it is in our interest to have a better outcome, not only on the trade side, but also on the investment side and on the sentiment side. And that's why I think rightly so, India has not retaliated. India has made some statements. India has put up its point, but India has not retaliated in any form or manner. And maybe the hope is that we will actually end up having some negotiations, and maybe if that happens to be cutting down Russian oil, so be it. I mean, it is in the benefit of the overall economy.
Right, interesting. Okay, that's the take coming in on what the market construct right now is looking at. Today, of course, you've had that bit of a knee-jerk reaction play out. Lots really going on. It's a truncated week. It's a big one at that, not just the tariff implementation come tomorrow morning, but you've got the MSCI rejig as well, which is in place. And then Thursday, of course, you've got the expiry too. But over a 200-point dip is what you're seeing on the index alone right now. And more importantly, the shape of the market breadth as well is looking quite bleak. You've got a count of 179 stocks standing to the declines, which is 42 odd standing to the advances within the F&O pool. Sectors like telecom, realty, financials, banks, infra, chemicals, etc. are the ones which are weighing acutely heavy on the markets right now. But Akshay,